As long as buyers, whether pension funds, foreign central banks, or other nations, believe in America's long-term solvency, Washington can keep borrowing against tomorrow to spend today. This explains why tech stocks and financial markets have soared despite economic fundamentals. They're being buoyed by this endless river of debt-fueled liquidity. But this house of cards is showing dangerous cracks. Since 2022, when the Biden administration froze $300 billion of Russian reserves and weaponized the SWIFT system, global confidence in dollar neutrality has shattered. Countries suddenly realized, if they can do this to Russia, they can do it to us. The response has been swift, from accelerated gold accumulation to oil transactions in yuan. Now enter Donald Trump and his trade wars. His aggressive tariffs and sudden courtship of Middle Eastern oil states aren't just policy choices, they're desperate attempts to maintain dollar inflows. When Trump demanded $3.2 trillion from Saudi Arabia, he wasn't negotiating, he was panhandling for the world's largest debtor nation. The endgame is becoming clear. When foreign buyers finally balk at absorbing more U.S. debt, the Federal Reserve will be forced to monetize the debt directly, effectively printing money to buy its own government's bonds. The immediate effect might look deceptively positive, a temporary market high from all the cheap money flooding the system. But the long-term consequences will be catastrophic: runaway inflation, currency devaluation, and the simultaneous collapse of stocks, bonds, and the dollar itself. History offers a sobering parallel. In 1985, Japan's economy seemed unstoppable, its corporations buying up American landmarks while its debt-fueled bubble grew. The crash that followed led to 3 lost decades. Today, U.S. debt market volatility matches levels last seen during the 2008 financial crisis. The uncomfortable truth is this: America's debt addiction has passed the point of no return. The $36 trillion debt mountain cannot be paid down, only rolled over. Each new debt ceiling increase, each desperate auction, brings us closer to the moment when the music stops. When that day comes, the Fed will face an impossible choice: let interest rates spike and crush the economy, or print unlimited dollars and destroy the currency. There will be no elegant solution, just the painful arithmetic of an empire that spent 40 years living beyond its means. The age of dollar dominance that began at Bretton Woods is ending not because of some external challenger, but because America is committing economic suicide one treasury auction at a time. When historians look back, $36 trillion in debt won't be remembered as just a number, but as the epitaph of American economic supremacy. If you're not preparing for this reality, you're not paying attention. This is Lily, bringing you uncomfortable truths about the coming dollar crisis.